This is Andy O'Fee, the Yankee Closer. Today is Wednesday, March the 22nd, and I wanted to do a quick video this morning to kind of go over what's going on. The market has really had a nice run here in the last couple of days, with stocks taking a breather as Washington battles their Healthcare Reform Act, and it's really driven people out of equities and forcing yields lower on the Treasury market. We also had some pretty interesting housing data as well as mortgage applications. Mortgage applications are lower once again year over year. For those of you who were not unaware of this, mortgage rates are actually 52 basis points higher year over year. That translates into a 30-year conventional loan, which would be priced approximately at 4.5% today. 1 year ago, they would be about 4%. However, still some pretty strong numbers considering the fact that rates are higher. We also had the FHFA Home Price Appreciation Report come out also, and that also showed an improved number, which is another solid number in regards to the housing market. So again, the market is strong. It's not overheating. We like to call it a little bit of a Goldilocks effect. And then finally, we actually saw existing home sales come in slightly lower, but we also have to remember that inventory levels are lower. One piece of data that came out this morning that was really pretty incredible is that inventory levels right now are at a 3.8% per month availability, which is an all-time low. It's really unbelievable out there, and I'm sure all of you are aware of that, dealing with multiple offer situations and people trying to scramble to buy a house. It's really starting to get a little bit kooky out there, but again, the buyers are lining up despite the fact that rates are rising. Let's go ahead and take a look at what the market's doing here this morning, because the market's giving us another opportunity to take advantage of locking in at a lower rate. Let's take a look and see what we're doing right now. As you can see, the last 4 or 5 days have had a really nice run. This is where the Fed raised short-term rates, and as I may have mentioned in the past, and I've told people otherwise from the video, that when the Fed raises rates, it kind of does a negative dynamic to the mortgage market, actually pushing prices higher and our rates lower. The Treasury market is something else that we need to take a very good look at too. We have been marking 2.385 as a line in the sand that we need to keep our eyes on. So right now, we tested it this morning. We bounced off there. We're at 240. But as you can see in the past, each time we test that level, test, fail, test, fail, test, fail. Once again, we're testing it again. Can we break down below that? And if we can maintain that trend, we could get down here to this 220 next support level, which could be a very, very good number for us going forward. Anyway, Andy O'Fee from Crump Mortgage with a quick, actually not a quick update, but a lengthy update, because we have a lot of things going on. I'm going to position myself here with my buyers to float to see how we go through the rest of the day, keep our eyes on stocks, and again, keep our eye on that line in the sand at 2.385, which is a significant Fibonacci level that we're going to keep our eyes on. Thanks so much and have a great day.